So the stock market has rallied back. It's one of the biggest rallies the S&P 500 has ever had since the beginning of the 1990s. Can we be sure that it will carry on like this? I'd like to suggest that we need to apply the Bobby Ewing test. Bobby Ewing was a character in the big primetime soap opera Dallas, and at the end of one season, he got killed off. A season later, after an entire season with a dead Bobby, they started the next season with Bobby emerging from the shower for his wife to discover that the whole of the previous season had not happened. It had been a dream. So anybody following Dallas could forget about an entire season of it. It hadn't happened. That becomes the Bobby Ewing test for markets. For the last 6 weeks, many people have assumed reasonably that 145% tariffs on China and so on basically were a guarantee that we were going to inflict a recession upon ourselves. That risk has pretty much gone away completely. Does that mean that we can ignore Liberation Day and everything followed it in the same way that we can ignore the Bobby-less season of Dallas? I don't think we can. Tariffs that we still have are higher than they were before. That slows down the economy. We still have considerable uncertainty about negotiations, particularly with the EU and China. And if trust in the US hasn't been destroyed, it's certainly been damaged. It's been rocked by the sheer inconsistency of their policy over the last few months.